to the Forex friend, and I'm going to ask you a question. How would you like it if you could double your trading account every month? Sounds a bit unrealistic, doesn't it? Something that you find in a movie maybe about some fantastic trader. But today I'm going to show you how that is actually possible. But first of all, I want to just show you what it could do for your life. So let's take a hypothetical situation of an opening balance on your Forex trading account of $100. Now, let's assume you were able to double that every month. Let's see what it does for you over a year. Well, I worked it out that at the end of 12 months, you would have $200,000 in your account. You would be able to grow it from $100, which is not an awful lot of money. I think most people could try and get together $100. They could grow it from $100 using compound interest to $200,000. Now you can imagine if you do that with $100 over a year, and you ended up with $200,000, what you could do with it over another year. So we're talking about some amazing things here, things that seem almost fantastical, that seem impossible. But in this video, I'm going to show you how it's actually possible, not stuff made of dreams, but really possible. And of course, you need some skills, you need some practice, you need to get it right. And so there's nothing guaranteed in this, obviously. It really depends on your skill level. But I'm going to show you the kind of skills that you need and the strategy that you need to actually make it work. So come with me. I've got 4 or 5 points I want to make, and you need to know all of them. You need to go through all of them. So, and if you like what you've heard so far, push the like button and subscribe, and we'll get stuck in. Okay, so let me explain to you the basic philosophy underlying this approach. The idea is that you find trades that happen all the time on the Forex charts that are going to give you a minimum of 5-to-1 reward to risk. In other words, let's assume you start with $100 and you only want to risk $10 each trade, which is about 1%, right? So you're risking 1%, $10. So if you lose, it's not a train smash. It's not nice, but you're not going to die because you've lost $10. But the idea is here that every trade you make will give you $50 minimum. You've got a 5-to-1 reward to risk basis. And you do that twice a day. So every day you're making $100. And then, of course, as the account grows, that 1% risk grows from $10 to $12 to $15. So all the time you're increasing the actual amount of money you're risking, but you're not increasing the percentage of your account. And that's the beauty of this, is that your risk percentage stays the same, but the money value of it is increasing all the time. So that's the basic philosophy behind it, that you've got to find trades that are going to give you a reward of 5 for every 1 that you risk. You say, is that possible? It's absolutely possible, yes, if you know what you're doing, if you know what to look for. Now, it's not a trading strategy that I have found anywhere else on the internet or in any books, but it's something it took me about 12 years of trading to work out, and it was more by accident than anything else. I got to the point where I was able to far more than double my account in a month. I won't tell you how much because you wouldn't believe me. But then I worked out that I was actually risking quite a lot to do that. And I thought, well, how can we reduce the risk and still make fantastic returns? So I came up with this idea, well, risk 1%, and as you grow in confidence and as you get more experience, you can increase that 1% to 1.5, maybe to 2, maybe to 2.5, depending on how confident you are and how skilled you are. So now let's go to a particular chart just to show you how this would actually work and the details involved in it. So please stay with me, because you need to listen to all the points I've got. And when you get to the end, I'm pretty sure you'll see just how feasible this trading strategy is. Now, if you like what you've heard so far, please push the like button and subscribe. And we'll move on to the next point. Okay, so now the second philosophy on which this strategy is based is the fact that you want to use a dual time frame strategy. So you're not just looking at one time frame, you're looking at a double time frame. So basically what's happening here is you're going to use the longer time frames, like an hour, 2 hour, 4 hour, because they tend to be more reliable. They usually give more reliable signals, and because we're looking to make a 5-to-1 reward to risk, and you need a movement that is fairly strong. Now, if you look on the 5-minute charts or the 15-minute charts, you won't really find a movement that's very strong off a particular candle signal. But if it's an hourly or a 2-hourly or 4-hourly candle signal, then it's going to move much further than it would off a 15-minute candle. So you need the longer time frame candles, signals from the candles. And then what you want to do is you want to go back down into the 1 or 2 minute candles to look for places to put your stop loss. Now you say, well, that's pretty dangerous, isn't it, to work your stop loss off a 1 or 2 minute candle chart? Well, it depends. It depends how carefully you've chosen your 1 hour or 2 hour or 4 hour candle signal. If, for instance, you make sure that it's a very reliable signal and it's in a trend, then your 1 or 2 minute signal on the chart can be very reliable. Now, a 1 or 2 minute signal is not reliable in itself, of course. They're very unreliable. But if they're accompanied by a strong trend on a 1 or 2 hour chart, then the chances of it going back against you are very slim. So you need to know how to set up your stop loss on a 1 or 2 minute candle in conjunction with the longer time frame candle, in order to get your 5-to-1 or 7-to-1, sometimes 10-to-1 reward to risk. Obviously, if it's a 4-hour candle, your chances of a 10-to-1 reward to risk is far greater than if it's a 1 hour. Because if you find a really good 4-hour candle, it means price is going to move a long way. All right, so I'm going to show you now an example of this using the USD Canadian dollar pair on a particular chart. So let's go to that particular chart and I'll show you how it works. Okay, so let's have a look at a particular Forex pair, and we're going to look at the USD CAD. And this is a nice one because any of the USD pairs tend to move very smoothly and give very reliable signals, especially on a 2-hour chart. So this is a 2-hour chart of the USD CAD, and I'm using an MT5 platform because the MT5 gives me access to 2-hourly, 8-hourly, 12-hourly, as opposed to the MT4, which doesn't give me those options. Now, let's have a look over here. You can see that we're going to be looking at the confluence of the flat black line and the horizontal blue line. You'll see that price has been coming up nicely, and you can see using the 20 EMA, the moving average, it gives us a nice clear understanding that we're in a very strong uptrend. That's about a 45-degree angle, which means it's a very strong positive uptrend. So we know we're in an uptrend. So we know that if we find a good place to enter on the uptrend, it's going to be a pretty reliable trade. And because we're using a 2-hour candle chart, if we find a good entry point, it's going to go a long way. So let's have a look here. Now, at this point here, over here, we see price was coming up, going down a bit, didn't go far when it came down, kept going back up, went up a bit more, and then it came back down to the green line, which is the 10 EMA. Now, that's what price often does. On the longer time frames, price usually comes back to the 10 EMA, occasionally to the 20, and very occasionally to the 50. But normally what happens is it will come back down to the 10 EMA and then bounce off it. And that's exactly what happened here. Price came down with a nice big red candle, and we can see also here that it's very close to a natural support base. You can see here, that one pinned down to it, that one came up to it. So we've got a place of natural support, and we've got a place of dynamic support with the 10 EMA. And what actually happened is we had this candle here, but what I'm looking for is I'm looking to get in here, where it comes back down to this dual support area. Because if I can get in here, I'm going to enjoy a very nice long run. Now, of course, at the time, I can't see further than the red candle. That's all I'm seeing in reality, in live trading. I'm only seeing the red candle. So I'm saying to myself, is this red candle going to take price down, or is it going to bounce? Well, the chances are it's going to bounce, because I'm in a very strong uptrend on the 20 EMA and on the 50 EMA. They're all showing me that price is in a strong uptrend. So the chances are price is going to bounce at that place, and I'm looking to trade the bounce and get a very, very good return of at least 5 to 1. So what I'm going to do now is I'm going to put in my lines here just after the red candle, and I'm going to look for a long trade on the 1 or 2 minute candles so that I can put in my stop loss on the 1 or 2 minute candles, which gives me a very small stop loss compared to what I'm expecting to make. And I'll show you how that worked out. I'm going to go now into a 1 minute candle and show you what actually happened. Right, now we've got the 1 minute chart, and you'll see where that vertical blue line intersected with that flat black line on the 2-hour chart is actually here. Now, that red candle on the 2-hour chart looks like this on the 1 minute chart. You can see it coming down until it hit that flat black line and kind of bounced up, bounced down. But remember, we're looking for an opportunity to go long here, to buy, and we're looking for a good signal on the 1 minute so that we can put a stop loss against the 1 minute, because if I had to put the stop loss on the 2 hourly, I'd have a huge stop loss and not much chance of good profit. So we see price came down and it bounced here on that flat black line, went back up, and I'm looking for a long trade now here. Obviously that's not a long signal, that's a short signal. And I could have put in a short trade there with my stop loss up here, and I could have made a 2-to-1. But I'm looking specifically for a long trade, so I'm looking for a place to put in my stop loss. And what I'm looking for is I'm looking for a swing low. Now here's a swing low here, pretty much in line with that swing low there. So do I want to put in my stop loss under this swing low here? I would prefer price to break through the 50 EMA on the 1-minute chart. So I wait for it to break through the 50 EMA here. Here's the 50 EMA brown line. It breaks through, comes back up, and then goes back down to the 10 EMA, just like it does on the 2-hourly chart. And then it gives me a nice big engulfing candle here. So it engulfs 1, 2, 3, 4, 5. So I've got an engulfing candle that's engulfing 5 previous candles and forming a swing low. So if I put in my entry point here and put in my stop loss underneath that swing low there, it should give me a very good reward to risk profit. Now, what I would do then is I would have a look and see what does that space there represent in terms of money on the USD CAD. Well, then I need to know how much each cent is worth per one lot. And I need to have that already worked out so that I don't have to go away and work it all out again. Because when you're dealing with the 1-minute charts, these things move pretty quickly. You can see basically, had I put in my stop loss, had I put my buy signal there, I would have had about 2 minutes to work everything out. So I have it all worked out beforehand. And I go to my little list of currencies, and what do I see? Let's have a look. What do I see there? I see that the USD CAD is worth 9 CAD for every cent it moves per one lot. So now I can work that out quickly in my head. Got a little calculator open, and I say, okay, well, let's have a look and see how many cents does that represent? Well, that's 62. It's on 62, and if I put it in there, it's on 59. That's 3 cents. If I go in on one lot, that is 3 times, can't remember what I said now, so go back and have a look quick. I said it was worth 9. So 3 nines is 27, if I remember correctly. So I would be risking 27 Canadian dollars, but I only want to risk 10, which is roughly a third. So I want to enter a trade at about a third of a lot, which is 0.3. So if I put in my buy signal here, and I put in my stop loss there, which is roughly 3 cents, and if price moves against me, I've lost $10, roughly $10. But because we're in a very strong uptrend, and because I've got a strong signal on the 1 minute, and there aren't many big pinbacks on this chart. I can see that there are a few pins, but they're very small. It doesn't have a habit of giving these big pinbacks to take out your stop loss and then move towards what would have been your goal. So I'm pretty safe. So I would have put in my stop loss there. I would have put in my buy signal there, and let's have a look and see. Well, that would have been $10 profit there, and probably another $10 profit there. But now we see that price comes back down strongly. So we have a very strong reversal candle here on the 1 minute. So I think what I would have done is I would have gotten out there and taken the profit from my entry to there and waited for price to come down. Because one thing we do know about price is it never moves smoothly up or down. It always tends to go in a circular movement. So like this, up, down, up, down. So really what I'm doing now is I'm waiting for another opportunity on the 1 minute chart to score again. And we see over here, it gave me a very nice entry signal, gave me a very nice long signal here. Price came up through the lines, through the combination of 50, 20, and 10 EMAs, came back to them when they're all squashed together. Now that's a very powerful sign. When you've got the 10 and the 50, the 10 and the 50 and the 20 all squashed together like that, it's a strong signal that price is going to shoot up, or could be down if you're looking at a negative trend. So we're looking at a positive trend. We're looking at trend going up, and we've seen that on the 2 hourly, we've got a very strong EMA, 20 EMA moving up. So we can trust in that. So I would have put my stop loss, I would have put my buy signal here. So let me move my lines. I would have put my buy signal there. I would have put my stop loss under there. And I would have worked out what does that represent. Well, let's have a look and see that that is 65.6 and 63.4. So that's 2 cents. Now we've already worked out that each cent is worth 9 Canadian dollars for one lot. And this is 2 cents. So that would have been an $18 risk if I were trading one lot. Well, I'm only wanting to risk $10, so it's roughly half. So then I can go in on 0.5 of a lot, because if it does come back down and take me out, I've only lost $10. Now I've already made about $15 here, close to $20 there. So I would still be positive. But as you see, price shot up from that strong support base. But when you see these 3 lines all together, you know that it's a strong support base. So price shot up, and let's see how much I would have made. Well, that's my stop loss there, equal to roughly $10. So I would have made another 10, 20, maybe 25. And here we have another reversal signal, just like this one. 2-bar reversal. We've got another 2-bar reversal here. I could have got out there because I know that price is circular, moves in a circular fashion. I know that it's going to go up for a while and it's going to come back down and go back up again and come back down. So let's have a look. Yes, sure enough, it did the same thing again. So I've made 1.5 times my stop loss here. I've made about 3 here. I'm up to close to 5 already. And let's have a look and see. I'm waiting for one more because I know that from the 2-hour chart, I know that price is moving strongly up. So what I can do now is I can go into my longer time frame and I can look, what is the time now? Let's say 2 hours has gone past. So I'm now looking at the next 2-hourly candle to see what it's telling me, or the next hourly candle to see what it's telling me. If it's still looking positive, then I know that I can keep trading. It's looking positive. And I mean, we know from the fact that that 20 EMA on the 2-hour chart was setting up, this thing's going a long way. And true enough, price comes back down again and bounces up and gives me a 2-bar reversal here. So this was a negative 2-bar reversal, this was a negative 2-bar reversal, this is a positive 2-bar reversal, and I'm pretty sure prices are going to keep going up. So I do the same thing with my stop loss here, and I'm looking for trades here up to here. Now you can see that this is starting to flatten out compared to that one there, which was very sharp. The blue line was very sharply up. Here the blue line, the 20 EMA is flattening out. So I know that the volatility for this pair is starting to go out. And this is where I think I would get out somewhere here. So I've probably made, what have I made? I made 1, 2, 3, probably made another 3 times my stop loss. So I could have made another roughly 30 Canadian dollars here. I could have made another 3 or 4 here. I made it 1.5 here. So we're already up to something like about 7 or 8 times my stop loss, which is exactly what we're looking for. We're looking for a really good reward for my risk. Okay, so let's see what we've been talking about. Okay, so let's go back over what we're actually trying to achieve and how we achieved it. We're wanting to double our count every month. And in order to do that, we're looking for 2 trades a day, preferably on the higher time frames, because they're going to give us a much better reward for risk. We're looking for a reward to our risk of at least 5, and we'll often get 7 or 8 if we're clever about it. And in that way, we're going to be able to double our account every month if we do 2 trades a day. So this is for people really who are willing to trade all day. You say, well, that's pretty tough. Pretty tough. Well, it is a full-time job, really. If you're going to be serious about it, it's a full-time job, but think of the reward. If you can make it work, and there's no reason why, if you apply yourself to it and practice, there's no reason why you can't make it work. Think of the incredible reward you've got here. Where else can you double your money every month? And if you do a 5-to-1 reward to risk trade twice a day, and that's completely possible, because you've got 20 charts. Now, think about it. You've got 20 charts, and you're looking at the 1 hour, 2 hour, and 4 hour charts for that day. Now, how many hourly candles have you got in a day? Well, you've got about 8 for each chart. How many 2-hourly candles have you got? You've got about 4. How many 4-hour candles have you got? You've got about 2 or 3. So that's 8, and 4 is 12, and 3 is 15. So for every currency pair, you've got 15 opportunities to find a good candle signal for you to exercise this strategy. So that's 15 for every currency pair, and you've got 20 currency pairs. You can use them all. That's 15 times 20, that's 300 opportunities every day to work this strategy. Now, if you can't find 2 decent candles out of 300, I don't know, maybe you need to take some vitamins or something. So that's why it's such a powerful strategy, because it's based on having access to 20 charts, and you've got 15 opportunities on each chart, and it does require a full day's work, but hey, you can give up your day job if you can make it work. And there's no guarantees here, obviously. It's entirely up to you, but if you use this strategy correctly, there's no reason why you can't trade your day job for some fantastic opportunity for the future to secure your financial future and to become wealthy, which is a fantastic opportunity for anybody, I think. And you just need to be average intelligence. You don't need to be a brain surgeon or a rocket scientist. All you have to do is understand the strategy and practice it for a while until you make it work. Okay, so let's have a look and see just how powerful this is if you're able to double your account every month. Now, I've just been told that my battery is running out, so let me just stop this and go and plug mine. Okay, so let's have a look at the possibilities here, and they're very real possibilities. It's not a pipe dream at all. Just need to make sure that you've practiced enough to make it work, especially when you're putting in your stop loss on the 1 minute chart. You need to practice that. You also need to practice looking for the right longer time frame signals. That's something else that you need to practice, because you need to be able to recognize the various different candles that are going to tell you that price is moving. So let's have a look here. We start off with 100, and that month we make double. We're up to 200 at the end of the month. So we double it again the next month, and you're up to 400, and then 800, then 1600. Now, initially, for the first four or 5 months, it doesn't look very exciting. Then you're up to 3,200, then 6,400. And this is where it starts getting exciting, because now you're doubling some pretty big figures, up to 12,800, up to 25,600, up to 51,200. Now, of course, these are rough estimates. You might make more, you might make slightly less. Initially, I would encourage you to move forward with caution until you're really confident, and maybe you only want to risk 0.5% of your account. But it goes from 51,200 to 100,000 roughly 100,000, and then the next month to 200,000. Now, you can imagine the next year, if you don't take any money out of your account and you just keep trading, you're starting to look at very big figures here. Now, is it possible? Of course it's possible. One of the reasons why it's possible is because most people fail. Most people constantly lose money. And the reason for that is they don't have a good strategy. And the reason for that is that you've got to have somebody to teach you a good strategy. And really, I haven't found anyone out there who can teach a good strategy. There may be some, but I haven't found any. I found a lot of fast talkers. I found a lot of hot air. I found a lot of people who claim that their little strategy works every time. And when I try it out, I find it doesn't work every time. It works maybe 40% of the time, against their claim of it being the solution to your Forex problem, which is a bit sad, but that's the way it is out there on the internet. So this gives you some idea of the potential. Now, you say, well, would a bank allow you to do that? Well, of course they would, because so many people are losing money. They don't mind paying out to somebody who's doing well, because most of the people are losing all their money. So if you come along and you can make it work, it's not a problem for them, because there's one pot. And if most of the people are putting into the pot and not drawing it out, it means there's a lot there for the people who can take out of the pot. All right, so let's see what we've spoken about today. Let me summarize quickly. The idea is that you have a strategy that is going to require you full-time work. Obviously, if you only want to do it half a day, it's going to be half as effective, and that might suit you fine. I'm just taking a kind of rough average here and using a person who works 8 hours a day. He uses the strategy and he's perfected it and he's practiced it until he's confident. And he started on X amount. And I just chose X amount as $100. Could be $1,000, could be any figure. But the idea is that whatever figure you start with, you're going to double it every month. Of course, if you're going to take money out of it to live on, in the meantime, well, it's going to dilute that pot. But in principle, this is how the strategy works. And it's a very good strategy, as long as you practice it, and as long as you implement it in the correct way, well, that's it. And if you liked what you heard, please push the like button and subscribe, because you know that it helps the channel. What Google look for is, in order to send these videos to the people who are looking for them, they want to know that there's some feedback from the people who are looking at them, that they push the like button, that they subscribe, and also make comments. So it would be a great help if you can make some comments and enter into some kind of interaction and discussion, and I'll be happy to answer for you. So there we have it. That's really good news. Really is some of the best news you'll ever get. And I encourage you to start trying it. If you can't do it full time, just do it a little bit at a time until you're absolutely confident, and you're confident enough to give up your job, or maybe you haven't got a job and you're confident enough to take the money and work it. But please practice it on a demo account. Don't start putting money into it initially. Make sure you can make it work properly, and only then take some money. Whatever you've got, practice doubling it up. But first, practice doubling it up on a demo account. Well, I look forward to seeing you again at the next video. Bye for now.